70% of Berkshire Hathaway's entire portfolio, sitting in just 5 stocks. This is happening right now, and most retail investors have absolutely no idea what it signals. Here's what's really going on and what you need to be thinking about before the market opens tomorrow. Berkshire Hathaway manages over $300 billion in public equities. That's not a typo, $300 billion. And Warren Buffett, the man who literally wrote the playbook on disciplined investing, has concentrated 70% of that mountain of capital into exactly 5 positions. Apple alone represents roughly 40% of the entire portfolio. One stock, 40 cents of every dollar Berkshire holds in equities. Bank of America is the second largest holding. Buffett has held it through rate cycles, banking crises, and market meltdowns without flinching. American Express sits at number 3. Buffett has owned it since 1964. 60 years. That's not a trade, that's a marriage. Coca-Cola rounds out the core. Another multi-decade conviction bet, a brand that prints cash in 200 countries. Chevron completes the top 5. Buffett's energy hedge, his inflation armor, his bet on real assets in a world drowning in printed money. 5 stocks, 70% of a $300 billion portfolio. Let that sink in. But here's what nobody is saying about this yet. And this is the part that changes everything. Buffett famously told retail investors to buy index funds. Broad diversification. Don't try to pick stocks. That's his public advice. But his actual behavior? His real money? It's the polar opposite. Hyper-concentrated in high-conviction compounders he's held for decades. So which Buffett do you listen to? The one giving the speech, or the one signing the 13F? Here's the brutal truth. Wall Street won't package into a soundbite. Concentration built Buffett's wealth. Diversification protects people who can't afford to be wrong. Those are 2 completely different financial situations, and most investors never stop to ask which one they're actually in. First, audit your own portfolio right now. If you own 47 positions, ask yourself honestly, do you have genuine conviction in all 47, or are you just collecting stocks out of fear? Second, study why Buffett chose these 5. Not what they are. Why? Look at free cash flow generation, durable competitive moats, and pricing power. Those are the 3 filters he runs every single holding through. Third, understand the asymmetry. Concentration amplifies both gains and losses. Buffett can absorb a 30% drawdown in Apple. Can you? Sizing matters as much as stock selection. 70% in 5 stocks. The Oracle of Omaha just showed you his hand. What do you think this means for your portfolio? Drop it below. This conversation needs to happen. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.